Assalamualaikum. So our company chose Bonia company as our reference for this assignment, and their main activities is selling handbag. Okay, first, what is operating segment? Operating segment is under MFRS 8 and have been issued by MASB in July 2009. As per MFRS, operating segment is activities that engages in business from which it earns revenue or incur expense, including inter-segment transaction. Second, whose activities are regularly reviewed by the chief operating decision maker for resource allocation and assessing performance. And lastly, for which discrete financial information is available. What does it mean by this? So all the operation in the company, the operating segment that related to the business, we call it as operating segment. And all of this operation will be recorded in the notes of the financial statement that we can find in the annual report. Okay, next, what is Chief of Decision Maker or CODM? Okay, so CODM is a function and not necessarily a person. That function is to allocate resources to and assess the performance of the operating segment. It is likely vary from entity to entity. It may be the CEO, the senior management team, or the board of directors. The title of the persons identified as CODM is not relevant. So what does it mean? It means that CODM is not a title. It is actually a function for anyone that is related to the decision making. Okay, so for Bonia company, who is their decision maker or the CODM? Their CODM is actually their director. That is their CEO. That is Datuk Sri Daniel Chiang Fong Seng, and their board of director. This is the two of the CODM. For the segmental report, they use production and geographical segmental report in the financial statement. In the production, there is retailing and manufacturing, and in the geographical segmental report, there is revenue from Malaysia, Indonesia, and other country that they are operated in. So from the snippet in the slide, you can see the production and the geographical segmental report.
Now, let's move on to operating segment. You might be wondering, what are the benefits of operating segment for financial statement users? Let me explain it to you. First, clearer performance assessment. Operating segment reporting helps financial users to see which part of the business is performing well. For Bonia, we can see that the retailing segment clearly generates most of the revenue, while the manufacturing and investing segment contribute very little. This shows users that the retailing segment is Bonia's main engine of profit and the segment that matters most when evaluating overall performance. Second is better decision making for investors and creditors. Segment reporting also shows how assets, liabilities, and resources are spread across each segment, helping users to understand where risk and growth opportunities lie. For Bonia, most assets and liabilities are concentrated in the retail and property segment, meaning this area carry highest investment and risk. This helps users to judge whether Bonia is allocating its resources effectively and whether the business model is sustainable.
MFRS 134 prescribes the minimum content, including disclosure, and identifies the recognition criteria and measurement principle that should be applied in interim financial statement. Bursa Malaysia requires all entity whose debt or equity security are publicly traded to publish interim financial reporting. This report can be prepared semi-annually, quarterly, and bi-monthly, and can be completed or condensed of financial statement.
Next, I'm going to explain about two significant events and transactions that affect an entity's performance since the last annual reporting period. Firstly, impairment losses and assets write-down. In financial year 2025, Bonia recorded 10.6 million of impairment losses. This means assets like goodwill, lease stores, and customer debts were not worth as much anymore. The company also recorded 0.7 thousand of property, plant, and equipment. which could no longer be used anymore. This caused a big drop in company's profit, which the company posting an net loss in the last quarter. It also reduced the value of Bonia's asset and earning, which could affect the investors' view of the company's performance. The second significant event is winding up of dormant subsidiaries. On 16 April 2025, Bonia announced the members' voluntary winding up after subsidiaries SPM Marketing and SPM Marketing Subarnahok. The original investment for these subsidiaries were 100,000 for SPA and 400,000 for SPM. Bonia stated that this winding up is part of initiatives to eliminate unnecessary administrative costs. So, for the conclusion, the first event shows a negative impact on profit and asset, while the second event is a strategy to reduce costs and tidy up the company's structure.
Now I'll talk about interim financial reporting for both current and comparative periods. First, statement of financial position. As we can see, for the current period, start from 1st July 2024 until 30th June 2025. And for comparative periods, it starts from 1st July 2023 until 30th June 2024. Next, statement of profit or loss and other comprehensive income. The first one is interim quarter. The current period is from 1st April 2025 until 30th June 2025. And for the comparative period, it starts from 1st April 2024 until 30th June 2024. Second one is cumulative quarter. The current period starts from 1st July 2024 until 30th June 2025. And for the comparative period, it starts from 1st July 2023 until 30th June 2024. Now, for statement of changes in equity, for current period, it starts from 1st July 2024 until 30th June 2025. And for comparative periods, it starts from 1st July 2023 until 30th June 2024. Lastly, for statement of cash flows, as you can see from the slide, for current period, it starts from 1st July 2024 until 30th June 2025. And for comparative period, it starts from 1st July 2023 until 30th June 2024.